welcome back to another episode of the Finance TV. We're glad to have everyone here today watching, and I'm very excited to introduce our next guest here. We have a special guest from Morgan State University, Dr. Green Connor. Darlene is an entrepreneur, and she has successfully managed 3D accounting and tax services, a successful tax and bookkeeping practice since 1990. She provides bookkeeping and income tax services to individuals, small businesses, and nonprofit organizations. Investment and financial planning services are extended to clients located in Maryland, North Carolina, Virginia, Pennsylvania, Georgia, and Florida. She has her bachelor's degree in accounting from Loyola University in Maryland, a master's degree in administrative science, and a certificate in leadership development from the Johns Hopkins University in Maryland. She has been a certified public accountant since 1985, and she's received her Doctor of Business Administration at Columbia Southern University in 2019. Darlene has 30 years of experience in accounting, financial, and administrative disciplines, working in the electric and gas utility industry. Her areas of expertise include general accounting, plant accounting, budgeting, cost control, and leadership. She is currently employed as a part-time accounting professor at several online universities. She also resides in Maryland and enjoys spending time with her 3 daughters and 6 grandchildren. In her spare time, she enjoys reading murder mysteries, listening to music, and watching movies. Dr. Connor, thank you for joining us today. Before we start, I want to ask you a quick icebreaker question, and then we can get right into our interview questions. So for the icebreaker question, what is your proudest achievement?
Well, first of all, thank you for having me. Thank you for your invitation to do this segment. I think my proudest, I have so many accomplishments along the way that I'm proud of. First of all, I'm proud of my 3 girls. I have 3 daughters. Bringing them into this world, because motherhood to me is so sacred. I think that was a proud moment. My next highest achievement was achieving my doctorate. If anybody's gone through the process, you know how daunting it is. And I started to quit 1,000 times, and I didn't give up. And so I finally achieved my doctorate in 2019.
Congratulations on both the doctorate and motherhood and grandmotherhood as well. Well, if you guys haven't noticed by now, we're going to be talking about taxes. Obviously, it's tax season, or drawing near to the end of tax season, but better late than never, in my opinion.
Absolutely.
So the first question I want to ask, very simple, very quick. What are the different types of taxes?
Well, there are quite a few. There's the estate tax, there's the sales tax, there's the property tax, and of course there's the dreaded income tax.
Right. And which kind of taxes do Americans pay?
The typical American will probably not pay an estate tax because the estate tax, so the government's really good to us. You really don't pay taxes on your estate unless it's over about $12 million. So most normal people will not hit those levels. So the estate tax is something that normal people would probably not have to worry about. The most prevalent, of course, is the sales tax and, of course, the income tax.
And the state, that includes property. That's like property.
That's different. The state tax is different. There's a state and local tax depending on what jurisdiction you live in.
Okay.
And then the sales tax is not predicated on where you live.
Got you.
Right.
And for income taxes now, I think that's what a lot of our audience wants to hear, because obviously we're speaking to college students. It works with tax brackets. Am I correct? Okay, so how do those tax brackets work? And then how to know which tax bracket that we're all individually in?
Well, there are several tax brackets. They start at 10%. They go 10, 12, 22, 24, 25, 28, 37. But you can't really just say, I'm in this tax bracket. Every year is different. It depends upon your level of income. So let's say, for instance, you make $100,000. So you start with your gross income and subtract all of your deductions, which I'm sure we're going to go into, and you get your taxable income. And your taxable income is taxed at different levels. Some part of it may be 10%. The next level, let's say you're down to 50,000. So 10,000 may be taxed at 10%. The next 20,000 may be taxed at 22%. So you have to know your taxable income. So the other way to do it is to get an average income, your average tax. So you can say, once I get my tax liability, I divide that by my taxable income, and that's my average tax rate.
Okay.
But there's no way to know before you do your taxable income, what your level is.
Got you. What are the U.S. federal income tax rates and brackets?
Right. They were the tax rates that I quoted you. They were the 10, the 12, 22, 24. They are the brackets, so you will fall into one of those, those tax brackets based on your income levels.
All right. And then who has to pay income taxes in the United States?
Like everyone. I think some people say, well, I don't have to. I hear it a lot. I don't have to pay taxes because one lady said, well, I'm 82. Do I actually have to pay taxes for the rest of my life? Well, the answer is yes. If you make income for the rest of your life, you're taxed for the rest of your life. Although you do get some tax breaks for being over 65, maybe disabled. But as long as you generate income, taxable income, there is no age limit.
Is there like a income level that you have to make in order for it to be taxed?
Oh, absolutely. Usually, but this year usually is about $13,000 because you get exemptions that total about $13,000, so you end up not paying taxes on it. So if you are below a threshold, you're absolutely right. You don't have to file your taxes and don't have to pay.
Yeah, because my first year here, I don't remember paying taxes. Well, I went to the tax office and they said, yeah, you don't have to pay anything. I guess because I was beneath the threshold, the 13,000 threshold.
Exactly.
But I tried to pay. I'm not evading any taxes.
No, absolutely.
Okay, and then I know for, college students like myself, we typically go towards or we gear towards like those online tax filing apps. Do you recommend college students to actually use these apps? Are they good apps?
Well,
what are the disadvantages?
I'll just be careful what app I'm using to make sure it's legitimate, first of all, because there could be some fake websites that collect your information, the scam, the phishing. But the IRS has a list of tax preparers that are legitimate. If you are concerned about getting your taxes done for free, of course, you have VITA, right? Volunteer Income Tax Assistance. And you also have the tax advocates in certain states. You can go get your taxes prepared in person for free if you meet certain thresholds.
What is the difference among tax credits, deductions, and exemptions?
That's a great question. You say, yes, they're all three. They're all different. Tax credits are probably the best out of the three you offered up. The credits reduce your tax liability dollar for dollar. So if you owe, let's say, $5,000 and you get $5,000 for the credits, then you owe no taxes. The exemptions are, so basically the federal gives you an exemption amount. So that amount is standard, but you also can, you have exemptions for other things, right? So the exemptions basically reduce your tax liability, right? And you still have to calculate the tax on it. You have, let's say, dependent care credits. You have dependent care deductions. It reduces your tax liability, but it possibly may not eliminate it. But the tax credits may, dollar for dollar. But the other credits are not, right? They help you calculate your tax liability.
That's the deductions and exemptions helps to calculate the liability. So how much you would have to calculate your tax rate on, it decreases.
Exactly.
Got you.
Perfect. Exactly.
All right. And where do we find these tax credits and deductions and exemptions? Like, how do we know which ones we qualify for?
Well, it really depends on your circumstance. Let's say if you have children, that's the easiest one. You have a child care credit, and you also have a child care deduction for daycare. So I'm not sure if you're a college student and children. Sometimes, you have both. But if you have children, then you get all of the other tax credit exemptions that individuals get. So there's no difference between students and individuals. You all basically come under the same umbrella. So if you have children and you pay for daycare, there's a daycare deduction. And if you have children under 17, you get a child care credit. right? So it's for this year it's $2,000 for every child under 17. So you get all of those. So it's very typical if you are a student to get the same deductions deductions credits as the individual does.
Someone, well, a college student actually had asked me to ask you if they can use their pets as a dependent on their while they're filing their taxes.
No, I wish that was true. I do have a dog, and I spend a lot of money for
exactly.
it. But no, seriously though, if you have a dog and the dog is for a handicapped person, like you're blind, you can take medical deductions for the dog, right, for their care, because that's your medicinal pet.
Yeah.
Right. So seeing a dog and the person needs that aid, right? So there is a deduction for pet care.
Got it.
Right.
How do tax preparers maximize the filer's refund?
Now, that's a great question. I hear that a lot. How can you get me more money back?
Yep,
right?
Pretty much.
You can't. I love that question. You may get a person who hasn't paid taxes all year. Well, you can't get a refund for a person who has not paid into the tax program. Right. So let's say, I don't know, you make $50,000 and there's no money for federal withholding. There's no money for state withholding. It's impossible to get you a refund because now you're in a position where you owe for both federal and state. So it's really not up to the preparer. It's really up to you to do better planning. So if a tax preparer says, oh, I promise you I'll get your money back, I would just walk out the door.
So there's just no guarantee you're going to get
absolutely
a higher refund or not.
Now, you can make a person aware of all the deductions and benefits they're entitled to. But other than that, like, again, if you bring home, let's say all of your pay and have no withholding for federal, no withholding for state, it's absolutely impossible to make that guarantee.
Wow. What is the meaning of tax liability? I know we brought that up a few times during our conversation. And then I think you already went over how it's calculated, but we can revisit that.
Okay, absolutely. Well, the tax liability is after you started with your gross income, you subtract all of the deductions you get a deduction for, paying your student loans, right? So there's a student loan deduction. You get a deduction for your exemptions. The federal doesn't have exemptions anymore. So you get a standard deduction, or you can take an itemized. So the standard is basically everyone gets a basic level, right? And then above that, if you itemize, so if you have, let's say, for instance, a mortgage, you have interest, you have property taxes, you have church donations, that if that's more than your standard deduction, then you subtract that, right, against your gross income. And then the base, the difference, you use that difference to calculate your tax liability. And so there's a chart, and it says if you are a single person, you make this much income, this is your tax liability. If you are married and you make this much income, this is your tax liability. So it's based on your tax status.
Which states have the highest and lowest tax rates?
Right. So there are some with no taxes, right? One's Texas, one's Florida, and but the highest is Hawaii. And there are quite a few. Maryland's probably somewhere in the middle. Maryland's tax rate is about 6%, but it's definitely not the highest.
Well, good for us.
California, Hawaii, yeah, they're pretty high. I think Wyoming is no tax at all. Florida is no tax. Texas is no tax. So basically, if you leave Maryland, you basically get an increase, right? Because there's no state tax in those other states. So you may want to figure out where you want to move to and avoid paying taxes.
Is that why those, I know a lot of small businesses, I think, especially like on the internet, when you're looking for help or assistance with registering your business, and I know a lot of persons recommend you register your business in like Delaware.
It's very business friendly.
Yes, it was like what is it about Delaware that makes people want to?
Business friendly because the tax rates are lower, and when you say business friendly, I think Maryland, I won't say the highest tax rate, but when you come to Maryland, you end up paying more taxes, right? So that's something where businesses, they look to kind of optimize, just like you're trying to optimize where you live and reduce your tax liability. Businesses do the same thing.
Got it. So I've had a remote internship last spring but the company was in Annapolis, Maryland.
Okay, Miss Maryland.
Then I had a summer internship in Georgia, and then I worked in the lab in Maryland, Baltimore, Maryland, in the fall. So 2 Marylands, 1 Georgia.
Well, no, it's just 1 Maryland, right?
Oh yeah,
So
1 Maryland.
1 Maryland and Georgia. So you do not, well, if the payroll, if you get your W-2 or your 1099, whichever they give you, and it says Georgia, then you pay taxes in Georgia as a non-resident. Right, in Maryland, you would file taxes as a Maryland resident. Well, you're not Maryland, but just say you were a Maryland resident, and you would file taxes as a Maryland resident and get credits for the taxes you paid in Georgia.
Okay. Well, I hope my tax preparer knows this because I kind of outsourced.
So Georgia will know it if you have money.
Literally.
Because they will have your W-2, right?
Oh, yeah.
And they will say, where are your taxes? Because you have a W-2 from here. So the IRS will look for, well, the state of Georgia will look for that income tax. And they'll say, okay, you made income in Georgia, where are the taxes? And so you will get a letter from Georgia saying you didn't pay your taxes in Georgia.
Oh, they sent a letter.
Eventually, when they audit, yeah.
These different tax forms, the W-2 versus the 1099. What's the difference between those two?
The W-2 means that you are an employee. The 1099 means you're a contract employee. It's all right. So basically, when you get the 1099, you're responsible for paying your own federal and state taxes and your FICA, which is your Social Security income tax. So when you are an employee, right, the company you work for, they pay half of your Social Security and Medicare. You pay the other half. So when you're self-employed, which that 1099 indicates, you're a self-employed person, you have to pay both. But the good news is that you only pay once because you get a credit for, being the employer and the employee. Yeah, but you have to, the 1099 is more work. And you also have to make sure you cover yourself with federal and state taxes. So basically, if you don't do your taxes until the end, it's like a sticker shock. You go, I have to pay all of this federal and all this state at once. Yes. But if you were employed, through a W-2, your employer will be taking out the money, bi-weekly.
No,
and it doesn't hurt as much.
Yeah, it doesn't.
Yeah, if you don't see it and don't spend it, you're good. But as a 1099 employee, it's like you get the money and you don't think about, paying the taxes until at the end of the year.
Yeah, I think about it. I think about it all the time.
And there are ways to pay it. You can pay quarterly. So based on what you think your income is going to be on that 1099, you can pay quarterly. And then that's the same thing. And then at the end of the year, then your taxes are paid.
And what about, I heard you said something about Social Security, income tax, and Medicare. When your taxes are taken, let's just say it's taken out of your pay, if you're an employee, that's with the W-2 form, and they take it out, is that what it goes towards, Social Security?
Right, and Medicare.
Do I qualify for Social Security and Medicare?
Not if you have residency in the Bahamas.
But I've been paid.
Well, you shouldn't be. If you are working and you're working here, then there's a portion of FICA. But I don't think if you're based in another country, then you won't get the benefits of FICA because you have to be you have to be in the United States. To get the benefits. Like basically, you can't work here and then, let's say, leave and then get benefits at 65 or whatever. So I think you might lose those benefits. That's a great question.
Y'all are welcome. I'm giving to the Medicare part.
Right.
Okay, it makes sense.
I won't send you a final answer to that, but yeah, if you're out of the country, don't live in this country, they shouldn't be taking FICA out, but they are. And let's say you leave the country this week after you graduate, you're not entitled to benefits.
Yeah.
Well, it's a long story, but you have to have 10 years of work history to get Social Security benefits when you turn 65 or whenever you decide to take the Social Security benefits. You have to be either 62 or 65. But by that time, you're gone.
Yeah.
Right? So you're not a citizen of the Bahamas, so you would apply for Social Security benefits in the United States.
What does FICA stand for?
Federal Income and Contribution Act.
Federal income, okay. And those are...
And Medicare is separate.
From the FICA.
But they're two separate rates. One is FICA is 6.2% and Medicare is 0.0145. So together they're almost 8%.
Wow.
When you combine them.
How much tax revenue is raised in the United States of America? I'm just hearing tax after tax
Well,
after tax.
2022, the USA Facts says about $2.6 trillion, which is about 52% of the revenue that the federal government generates.
And how do they affect our economy?
That's a great question. Well, with the federal taxes, there are schools, the upgrades in schools, facilities. There's public safety, paying teachers, the policemen, the firemen. So it basically is used to provide services. And we normally would have to pay out of pocket for those if the federal government didn't take those it didn't pay them in advance using our tax dollars.
What are the most recent changes to law that have impacted individual or corporate taxes?
I'm going to say recent, right now, the only thing that's really changed from last year is maybe the exemptions, the rates that we're using to calculate our tax liability. Because of inflation. You get more money to, like for exemptions, they're higher, but it's only based on inflation.
Do these exemptions and credits, do they change every year?
The dollar amount changes every year based on inflation.
Based on inflation only.
Right.
So how will like the upcoming election, how would that affect, will it even affect like tax rates specifically for like higher income individuals? I know certain candidates were talking about, being very adamant about pursuing these higher income individuals and letting them pay taxes. So what does that mean?
Well, that's really not a change in law. That's really making them more accountable. That's right now, in terms of who pays the most taxes, it's the middle class. So the lower class, they get more help because you get more credits for, having children and they're under 17. You get more earned income credit, more child tax credits. When you're rich, you can pay lawyers, right, to help you reduce your tax liability. But in the middle, you lose so many deductions and credits. Like if your income is above a certain level, you may have a child in college, but you may not be able to take advantage of the American Opportunity Credit because you make over $180,000 if you're married. If you make over $90,000 if you're single, you're still paying the college tuition, but you don't get any benefit at all because your income level is too high. And the same for taking the student loan deduction. So if your income is over $90,000, that doesn't mean you're rich, but you don't get the advantage of taking the interest. So in the middle, that's where to me, you're compressed.
I do see it now. When is the best time to file like your taxes? Because I just started filing mine.
Sure, before April 15th.
Okay.
No, it's and that's a great question also. If you owe, right, and you don't file, there are two penalties. One for not filing on time and one for not paying your tax liability on time. If you file on time, you only have one penalty, and that's for not paying on time. So if you get a refund, there's no pressure to file by April the 15th. So let's say last year you received a refund. This year you still planned, your situation's about the same. So the filing deadline really doesn't apply to you. You have 3 years to file your taxes while you get a refund.
Okay.
So it's the people under pressure, those under pressure who know they have to pay.
For the April 15th deadline.
Yes.
So what if you're approaching April 15th, you realize, I may not be able to file this on time. Like, can we ask for an extension?
You file an extension, absolutely.
Okay, and we follow
before the deadline, you file for the extension. But if you owe, you still have to pay money with that extension, right? To keep from getting the filing, the paying late penalty. It doesn't keep you from paying. It doesn't change the status that you didn't pay. It gives you more time to find your documents. Some people might have had a fire or something, and you can't find your documents. But let's say, for instance, if you know you have to pay money, you have to send a check with that filing extension so that you're not given a penalty for paying late.
And how long was like the extension?
Until October.
Oh, okay. Yeah, you have plenty of time to find your documents.
And you can file it for another extension after that.
If you don't find your documents by then, I don't know.
But it's nice. Some people think if I file for the extension, I don't have to pay until October. That's not true.
You have to send the check with the extension, like you said.
Exactly. So it only tells IRS you're not ready yet. But if you owe, you still have to send the money in with the extension. So it doesn't give you more time to find the money. It gives you more time to find your paperwork.
Got it.
If that makes sense.
Yeah. And then before the cameras were rolling, we were talking about when you're making money outside of the United States. I live outside I've been living here due to school, but I do live like outside of I have a home outside of America because I'm not American. I'm from the Bahamas. So I'm curious to know what back home that what assets back home I may have prior to me even coming to America that may be taxable, or let's just say if I go home during the break and I have like a Christmas break job or like a summer job back home, like that's taxable. We don't have any income taxes back home, by the way.
That's a great question, but your body, like we were talking earlier, belongs to your country. As long as you don't change your status and you're not a citizen of the United States, you don't have to pay taxes here. So if you are a dual citizen, though, like you have citizenship here and in country, so I don't know if you have dual citizenship, but you still have to pay taxes in both jurisdictions. So what happens is that if you pay taxes in one, you get relief from the total tax liability from the other.
Okay.
So you still pay taxes in both places because you're dual citizen, but in the United States, you would say, here's my tax liability. I'm going to subtract what I paid in the other country. So you're only paying tax on the totality of your income one time.
Okay, good. Because I was a little curious about that. I was hoping. But
if you're a student, that's a great question. But if you're a student, you haven't changed your home state.
Yeah, I haven't.
You're just going to school here.
Yeah.
But your body and your money belongs to
I'm a citizen of the Bahamas.
You haven't changed citizenship, so you owe taxes to Bahamas.
Okay, good. Well, we don't have any income taxes, so maybe,
we need to move.
Yeah, Sana, y'all need to come over.
We need to go to the Bahamas.
Yeah, I don't have any income taxes over there. So that's just about all of the questions that I have for you today. I think this was a great conversation.
Thank you so much again for inviting me.
Of course. We look forward to having you next tax season.
Thank you.
And the tax season after that. So we can make sure we get all of our deductions and our credits. Thank you, everyone, for watching another episode of the Finance TV. I think this one was a short, quick, sweet, but insightful and informative one. And thank you once again, Dr. Connor, for coming today out of your busy schedule. And we will see you guys on the next episode. Stay tuned.